and welcome to our next episode of the Investing in the American Dream podcast. My name is Peter Helland, your host and marketing manager for First Pathway Partners, an EB5 capital firm based in Milwaukee, Wisconsin, that helps foreign investors become United States permanent residents through the Department of Homeland Security Immigrant Investor EB5 program. We are joined today by special guest Manuel Ortiz, who serves as FPP's Vice President of Global Business Development. Manuel has over 20 years of experience in public and private sector finance in global and domestic markets. Mr. Ortiz has led award-winning investor relations teams, directing capital raising efforts in excess of $500 million with investors from over 40 countries. In recognition of his work in emerging markets, he earned a National Industry Award for bringing EB5 services and educational resources to underserved countries around the globe. His rich expertise, communication with stakeholders, and cultural competency have earned him the trust of global institutional investors, family offices, hedge funds, qualified individuals, and their intermediaries. Today, we will be discussing FPP's latest rural senior loan secured EB5 investment opportunity, Kaia by Outdoor Citizen. Nestled within the clay canyons of Kanab, Utah, this project features 40 private dwellings with scenic desert views designed for the luxury traveler seeking an authentic connection with nature and their own well-being. During this podcast, we will be delving into its numerous EB5 benefits, including its Rural TEA designation and its reduced minimum investment amount of $800,000. So now we invite you to sit back and learn how an investment into this project can help you and your family achieve U.S. permanent residency. Manuel, thank you so much for joining us today. I think we're just going to get right into it. Why don't you give us an overview of the Kaia project?
Well, Peter, we're very excited about this project. I think one of the things that people often miss when they think about EB5 is all of the due diligence that we have to do on our side, because we not only have to find a good investment, but we have to find an investment that checks all the boxes from an immigration standpoint and also from the investment standpoint. One gets you your green card, the other one gives you your money back. And so it's very difficult to find these opportunities. And over the course of 2023, we saw probably over 100 deals that came through. And we had a hard time finding the right one. And when we came across this one, we absolutely loved it. It's located in Kanab, Utah. It has proximity to the northern rim of the Grand Canyon, Lake Powell. It's an area in Utah that receives over 5 million visitors per year. And we're just really excited about it. One of the things that you mentioned in your intro also is that it has 40 dwellings as well. And it gives the traveler, the people that are going to stay at this property, the ability to connect with nature, which now is more and more important.
Yeah, absolutely. You're absolutely right. So with that in mind, can you explain how Kaia fills the white space between adventure and ultra luxury in the hospitality market?
I think the easiest way to explain this is that you have luxury hotel brands in major metros. And the reality is that after the pandemic, one of the things that I just mentioned was that it's now more important than ever to connect with nature. But that was a lesson that was learned after the pandemic, is that people learn to appreciate nature more and go out and explore and go either hiking, horseback riding, and do all of those things. And for the luxury hospitality class, you do find these in major metros, but you're not able to find that type of a rural experience where you're able to go hiking in a luxury setting. You've had the glamping industry that has really just exploded, right? You hear that term everywhere now, not just in the US, but internationally. But there really hasn't been a hospitality brand, a flag that has actually created this experience at scale for the luxury segment, right? And so that's why having these 40 dwellings, it's definitely not a tent. These are really nice dwellings that are comparable with any luxury brand name that you can think of. And nobody has actually created this at scale. This gives the ability for the adventure traveler, for somebody that doesn't want to compromise and lose that luxurious luxury experience, but also be able to go hiking, go horseback riding, go out and visit some of the attractions that are within proximity of this project, whether it's Lake Powell, whether it's the northern rim of the Grand Canyon, those places. So it's in a very desirable area, and we're just really very excited to have this.
Yeah, going off of that, I think one of the closest competitive properties that have been successful has been the Amangiri Hotel. Is that right?
So you do see some competitive sets in the area, and a simple Google search will show that some of these places are charging $4,000 per night. Some of them, even when you look at a broader scope of these types of asset classes, have a 6 month waiting list. So
Yeah.
the demand is actually there. And because there isn't a lot of supply, your basic economics, where you have high demand, low supply, well, prices get a little bit higher. So you're starting to see that in this asset class. But again, nobody has really created this asset class at scale. And that's why we really strongly believe in the viability of this project.
Yeah. And that brings us to introduce our partner for this project, which is T2 Hospitality, who is the developer behind Kaia. So can you tell me a little bit about their track record? Didn't they just win an award for Marriott Project of the Year and Hilton Developer of the Year?
Yeah, they're one of the largest developers on the West Coast. And what has been really impressive about them has been that they've had the ability to grow from the ground up. And it's truly inspiring, what they've been able to accomplish. If you think about what they've actually achieved the American dream. And
Hmm.
it's very hard to grow a business from the ground up. If you look at just national statistics,
Yeah.
you start to notice that most businesses, and in fact, 70% of businesses fail in their fifth year. And that's such a high number, but they've been able to grow not only just to be a quality developer, but they're an owner and they're an operator. They've won
Yeah.
Developer of the Year for Hilton. They've won Developer of the Year for Marriott. And they have other awards that they've won at the industry national level for specific projects. And so we're just really happy to be able to work with such a top tier developer, because that's what really makes a difference. When you stay at hotels, you can stay at a really nice brand name, a luxury brand name hotel, but if the operations aren't where they need to be, staying at a brand name doesn't really mean much. And so we're really excited just because of their track record and what they've been able to do with their own platform.
Yeah, you're absolutely right. One of the most important things is finding a good partner, and they are definitely good partners. So, moving off of that, I would like to shift a little bit into how this project can fulfill the EB5 needs of investors. And if you could just give us some of the main benefits for these investors considering making that $800,000 minimum investment into this project, as in what do families get out of this $800,000 EB5 investment?
I think they get the opportunity. And you get the opportunity very similar to what the owners and founders of T2 Hospitality did, right? You're able to achieve the American dream or have the option to achieve the American dream. And more specifically, if you look at family needs, and those things, whether it's at the family level, mother, husband, and child at the family level, or just at the child level, there are major benefits here. Oftentimes, you hear that families that want to move to the US, whether it's for security reasons or to expand their business in the US, and sometimes it's to give their child the opportunity to change the trajectory of their family for generations to come. Oftentimes,
Yeah.
I look at my family history, and we moved here when I was 3. If that wouldn't have happened, we wouldn't be sitting
Yeah.
here,
Yeah, right.
or we would be doing very different things. And so that's really changed the life of my family for generations. And
Mhm.
that's what EB5 actually does. If you look at the international student that comes to the US from whether it's Latin America, Asia, or wherever it is, it's a very common story. They come to the US, they study here, they study very hard. And let's say you have somebody that finishes in the top 5% of their class. And then you graduate, and then you realize, okay, now I have to depend on a US corporation to sponsor me
Yeah.
so I can actually stay here. And those odds are, it's called an H-1B visa, are very low.
Mhm.
And I would say that sometimes it's a little unlikely because there's so much demand for those visas. And if
There
you
is.
don't get a corporate sponsorship, you then have to go back to your home country. And that makes it very difficult. Just give you one quick example is that I had met a family, and what they mentioned was that they were in that exact situation. Their son graduated from university, looked for a job, was looking for a sponsorship, couldn't get it, went back to their home country, ended up getting into the oil and gas business. The company that he ended up finding a job with sent him to another country. I think it was somewhere in Africa, and he was there.
Mhm.
And that experience for him wasn't right for him, and so he
Yeah.
ended up moving back to his home country and staying there, and still can't come to the U.S. And now he's looking to get another passport from somewhere else, right? So that changed the trajectory of that child's life for
Yeah.
3 to 4 years, right? And so this really does give you the opportunity and the option to be able to stay here and really work wherever you want.
Yeah, you're absolutely right. You're absolutely right. So moving on, obviously all investments do have some degree of risk to them. And it is very important for investors to do their due diligence and learn more about the degrees of risk with these investments. So can you just talk about some of the things that the fund does to mitigate risk and structure our investment opportunities conservatively?
Well, let's take a step back and just look at EB5 in general, right? Obviously, we focus a lot in this discussion on the benefits to the investor, right? Achieving the American dream, changing
Mhm.
the family trajectory for generations to come, and those things. But the other side of EB5 is that it's also an economic tool,
It is.
and it can play in any part of the capital stack of any project. And I think without getting really technical about this is just to say, like, let's say that you have a project that costs $20 million. Typically, what a developer will do is get a loan for $15 million from a bank, and then they'll invest 5 million themselves,
Mhm.
right? That's your conventional senior loan equity model that you obviously hear quite a bit about.
Yeah.
The riskiest of positions in a project is going to be being in the equity position, because that's where you get wiped out first. Because
Yeah.
you've got to remember, it's going to be a $20 million cost, but you expect for that value to increase as value is created, as the asset is built, whether it's a hotel, whether it's a multifamily apartment,
Mhm.
whatever it is, that value from that $20 million cost is going to increase, typically in your 3 to 5 year window.
Yeah.
And what you'll see is that $20 million cost maybe now is worth 35 million. Well, the bank really is only looking to get back their $15 million. In that position, they're in a senior loan, right?
Mhm.
So the investors in a senior loan are typically going to be more protected than they would be in equity, because the first thing to go is always going to be equity, right? So that's your senior loan equity component. You can also have these other things that are called mezzanine, which is where you add an extra layer of leverage to that cost, right? So let's say that on that $20 million example, they get a loan from a bank for, let's say, 10 million, and then they get a mezzanine loan from somewhere else from an EB5 perspective for 5 million. So now you've got 15 million, and then they invest their 5 million of equity, and then you end up with that.
Mhm.
That's what's called the capital stack.
Yeah.
And so EB5 can play in any part of the capital stack, but the most conservative is going to be on the senior loan. But just remember, the other thing to keep in mind is that just because it's a senior loan doesn't mean that it's a conservative investment. Each project has to be analyzed on its own merit. Why are they building it? What cost
It does.
basis did they get it at? Can the market actually absorb that demand, right? You get into some of these markets across the country right now where they might be getting into an overbuilt situation. And even if you're
Yeah.
in the senior position, that might be risky. So those are the things that you keep in mind as you're doing your due diligence on the investment side.
Yeah, so those are great points made on the investment side. But moving back into the immigration side of things, earlier in my introduction, I mentioned that this was a rural project. And for those not versed in USCIS regulations, Manny, I'd like to ask you, how do rural designated projects and the 20% reserved rural set-aside visas benefit potential investors?
So that's a great question. I think one of the things that investors really need to focus on as well is the immigration aspect of it. We just talked
Mhm.
about the investment. One gets you your money back, the other gets you your green card. And by focusing on the immigration side, I think it's also very important to have a intimate understanding of your specific situation. I think that right now there's a lot of misinformation as
Yeah,
investors are trying to conduct their due diligence, where you start hearing a lot of labels. You just mentioned rural. There's also urban TEA. There's infrastructure. There are all these things that investors have to look at. And sometimes if one of those labels becomes more popular, then investors automatically think, well,
yeah,
I need that because everybody's getting that.
yeah.
And the reality is that you might not. And I think that's what's important. It really depends on the investor's specific situation. One of the advantages of being in a rural or an urban TEA, right, is that the US government has set aside visa capacity. And so for a rural project like this one, it's a 20% that of visas that are set aside. In
Mm,
urban TEA, it's 10%. The reason that that becomes important is that if you're an investor that's from a country that is high demand, whether it's China or India, those are the top two. The fear is that some of those countries might run out of visas, right? So the
yeah.
capacity issue becomes more important for those countries. Other countries, you really don't have that type of a problem. But the issue then becomes for an investor is okay, I'm going to basically assume, because there are assumptions, we actually don't even have live data for this stuff. But the investor then assumes that because there are 20% visas available for rural projects, that there are more, right?
Mhm.
And the projections that are out there, because of unused visas from previous years, are actually rolling over into this
Mhm.
category. There's more capacity there. Is that okay for my country? Even though it's a high demand country, the thought is that there may be more capacity um, in the rural category, which
Yeah.
is why this would be an advantage. But again, I think it's really important to focus on the fact that you really have to understand your specific immigration needs. And then also, don't just go for the label because it's rural, but
Yeah.
actually look at the project from the investment standpoint, and more than just whether it's a senior loan, whether it's a mezzanine loan, or whether it's equity, more than just that. Why are they building this? Will the market be able to absorb that? So those are the things that you really have to focus on as you're conducting your due diligence.
Yeah, those are great points. Due diligence is such an important part of the EB5 process. So, Manny, what is the current status of the Kaia project, and what are the next major milestones?
Well, some of the things that are very exciting about this project is that it's about to start construction. So it'll start construction here at the beginning of August, which we're really excited about.
Yeah.
And the construction process is going to take, approximately about 26 months. And from there, we'll be able to start taking guests and those things. And we're just very excited about this project because the other thing about these smaller projects is that the what you call the ramp up period, the stabilization period for
Mhm.
smaller projects, just in general, is typically going to be shorter than some of these larger type projects.
So, Manny, I want to thank you so much for joining me today. Um, for all those interested in Kaia and the EB5 visa program, I'll place your contact info and the project link in the description. Do you have any closing thoughts today?
Well, I would just say thank you for listening to this podcast, first of all. And I would also say that just remember that no matter who you invest with, the most important thing that you can do is conduct your due diligence
Mhm.
first on First Pathway Partners or whoever you're looking to invest with, and then on the project itself. And then just remember always that the labels and the information out there, that's important, but each investor situation is going to be different. And so being able to apply your situation to what's out there is actually very important as well. And we look forward to talking to you. And please reach out with any questions. And Peter, thank you so much for hosting. And let's get this next podcast teed up as well.
Yep, sounds good. Thank you, sir.